day everyone, you're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. Our focus this week is on Nigeria's Q1 2026 GDP. Growth holds steady, but energy prices may test the recovery. The National Bureau of Statistics has released Nigeria's Gross Domestic Product GDP report for the first quarter of 2026, and the figures indicate the economy started the year on a positive note. Real GDP grew by 3.89% year-on-year in Q1 2026, up from 3.13% in Q1 2025, though slightly below the 4.07% recorded in Q4 2025. This suggests the economy is still expanding, but at a slightly slower pace than the strong close in Q4 2025. GDP simply measures the size and activity level of an economy. When GDP grows, it means businesses are producing more, services are expanding, and economic activities are improving. In nominal terms, Nigeria's GDP stood at 110.8 trillion naira in Q1 2026 compared to 94.1 trillion naira in Q1 2025, representing a nominal growth of 17.8%. A key highlight of the report is that growth was supported by the three broad sectors of the economy. Agriculture grew by 3.2%, a major improvement on the 0.1% recorded in Q1 2025. Industry grew by 3.5%, slightly higher than the 3.4% recorded a year earlier, while services remained the largest contributor, growing by 4.3% and accounting for 57.7% of real GDP. Agriculture contributed 23.2%, while industry contributed 19.1%. The non-oil sector remained the real backbone of the economy, contributing 96.1% to the real GDP. It grew by 3.9% higher than 3.2% recorded in Q1 2025, although marginally lower than the 3.99% recorded in Q4 2025. This growth was driven mainly by telecommunications, crop production, trade, cement manufacturing, financial institutions, real estate, construction, and road transport. The oil sector also recorded positive growth, though the figures indicate some pressure. The oil GDP grew by 2.6% year-on-year, up from 1.9% in Q1 2025, but well below 6.8% in Q4 2025. Average daily oil production stood at 1.55 million barrels per day, down from 1.62 million barrels per day in Q1 2025 and below 1.58 million barrels per day in Q4 2025. This shows that while oil still matters, weaker production continues to limit the sector's impact on overall growth. Key drivers of Q1 2026 growth. Looking at the key contributors of real GDP, trade remains the largest activity, contributing 17.9%, followed by crop production at 17.4%, real estate at 13.1%, and telecommunications and information services at 9.2%. These sectors continue to show where the real weight of the Nigerian economy sits. Some sectors also delivered strong real growth. Information and communication grew by 10.9%, with telecommunications growing by 12.2%, confirming the rising importance of data, digital services, fintech, mobile payments, and technology-enabled businesses. Arts, entertainment, and recreation grew by 11.3%, while water supply, sewage, waste management, and remediation grew by 10.3%. Finance and insurance grew by 8.5%, while construction expanded by 6.4%. Manufacturing also improved, rising by 3.3% compared to 1.1% in Q4 2025. Within manufacturing, cement grew by 11.5%, while food, beverage, and tobacco grew by 4.1%. This is encouraging as stronger manufacturing supports local production, jobs, and import substitution. However, the report was not entirely positive. Electricity, gas, steam, and air conditioning supply contracted by 15.3%, while air transport declined by 7.6%, and other services fell by 1.9%. These weak areas remind us that power supply, logistics, operating costs, and infrastructure remain major constraints on faster economic growth. What this means for businesses and investors. For investors, the Q1 2026 GDP report reinforces the need to focus on sectors with robust structural demand: telecommunications, banking, banking, construction-related companies, cement, consumer staples, agriculture-linked businesses, and selected real estate opportunities. For long-term investors, the strategy remains the same. Focus on quality companies, build gradually, diversify across strong sectors, and let patience and discipline do the work. For SMEs, the message is clear. Opportunities remain across food processing, logistics, digital services, construction support, waste management, telecom-related services, and agricultural value chains. Businesses that can control costs, improve efficiency, adopt digital tools, and position themselves around essential needs will likely remain more resilient. Q2 2026. Growth has momentum, energy prices have other plans. Looking ahead to Q2 2026, Nigeria's growth momentum is expected to remain positive, supported by stable FX conditions and continued expansion across services, telecommunications, banking, construction, and agriculture-linked activities. However, the ongoing war in Iran has already pushed global crude oil and energy prices higher, with efforts filtering through the fuel, transport, logistics, production costs, and consumer prices. Oil and gas companies may benefit from higher crude prices, while aviation, transportation, manufacturing, and consumer goods and construction are likely to face tighter margins. Overall, Q2 growth should remain steady, but energy costs remain the key pressure point to watch. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed and have a great week. Bye.